Hey, Bubba Trades! I wanted to do a video analysis update of the stock market, and to be honest, I'm not really sure where to start. There are some software stocks and some solar stocks that are down big. We've seen a lot of large caps have a lot of fun with earnings. We've seen crypto, and, we've seen some value sectors do well. And I think if, you know, there's a lot going on, right? So I kind of just wanted to tell a story, because a lot of times people talk about trade mentality, the mentality that it takes to be a trader, an investor. And I think one of the first things that I learned was that there's no church. There's no church in the wild. There's no church in the stock market. A lot of people think, the stock market should crash because they don't really like American policy, right? They don't like what we're doing, you know. Sometimes it's because of Democrats in office or Republicans in office, or sometimes it's because, the shadowy cabal is behind the scenes and they don't like it, right? Or they think inflation and the debt machine and corporatocracy is evil. That's why the market should crash, right? You know, and just doesn't work like that. Unfortunately, you can be as angry as I am that Facebook was selling, our information, during the 2016 election, interfering with our election, for advertising dollars or what have you. You can be as mad as I am that Apple, for many years, had their iPhone batteries mined by people who were getting paid a loaf of bread each day, right? But that doesn't mean, the market's gonna crash. And I think there's another aspect of trade mentality. We're supposed to react, right? We're supposed to react to earnings. We're supposed to react to Fed meetings. We're supposed to react to this, that, and the other, you know. But it's not like that. I think Elliott Wave and Wyckoff analysis always appealed to me because there was this idea that we were supposed to expect, fake outs, moves to the, trap the people, right? And a lot of times people are talking about strength. Oh, this looks so strong today. Oh, this is weak. It can't hold support. And Elliott Wave and Wyckoff, we're looking for the big scary fake out. We're looking for a stock, um, you know, most recently a stock like Meta, right? To go just right below, this big old low that it formed all the way back in 2018. Go clip every single person's big stop. Whoa, look at that big low. Meta's below support, right? Immediately up right after they get everyone stopped, right? Elliott Wave and Wyckoff look for stuff like that, and that's why, I've thought it was interesting, from the get go, that Elliott Wave was looking for corrections. They were looking for, the sentiment in a stock to be, real bad at a wrong time. And so what Elliott Wave teaches is that, when people get really hyped up about a stock like Roku or Neo or, Virgin Galactic, right? Those really, really highly volatile stocks. Fastly, another example. And then they have these, crazy run ups. Everyone's saying they're the best thing since sliced bread. What Elliott Wave and Wyckoff remind is that yes, there's a good chance they are the next best thing since sliced bread, right? Rocket Mortgage, some of the meme stocks, right? Like Nokia, like Palantir, this company that has 7 to 8 year contracts with the government, stocks like Shopify and, Snapchat that seem to have this big advantage. Why aren't they doing so well in the short term? And Elliott Wave and Wyckoff say we're supposed to look for corrections, right? We're supposed to look for a stock like Tesla that's real volatile, real kind of, real kind of, they call them cult stocks sometimes, right? They got big opinions about these stocks. I'm looking for these dramatic shakeouts. I'm looking for these times people are calling them the CEO, Enron Musk, right? Enron Musk is scamming the retail bulls, right? That's something that I'm looking for. And that's all part of something called technical analysis, right? Fundamental analysis, bias. And luckily, we live in a really cool world right now where there's ETFs like Tesla, OARK, QYLD, QYLG, XYLD, RYLD, JEPI, JEPQ, all SVOL, all types of ETFs that are selling the premium of this volatile asset's about to have a volatile move, right? And so I'm able to collect that premium. In that premium, that volatility is the price that's paid in the long term for upside appreciation. And that's an important thing for me to understand. So if we look at Tesla right now, I think that in the big picture, this larger degree count is most important, right? And that's something that a lot of people don't like to fit in a tweet about Elliott Wave, is that these bigger counts are a lot more important than the smaller degree counts, right? But right now, since we've had a little bit of a rally in a lot of indices and stocks, I think that the daily counts, the shorter term, are more useful right now, especially when defining upside and downside risk. So if we look at Tesla, we can zoom in and see that it's formed a large wave 1 subdivided into 1, 2, 3, 4, 5 waves, and it can end an ABC correction where the length of wave A place of the wave B high was where wave C ended. So the 78.6% retracement is all the way down at 126.60 right now. It's gone a little up recently in the past 24 48 hours, but what it can be doing above that level is beginning a wave 1 or ending a wave 2 correction and beginning a wave 3 that is the length of wave 1 placed at the wave 2 low. So that equal legs target could take it all the way up to 269. The 161.8% extension of wave 1 is all the way up at 289. So if we look, at Meta and also Nvidia, and I think also AMD, and most recently Microsoft, and even Apple, we do kind of get this idea that Tesla can follow, these names. It's certainly not guaranteed to happen. They're different stocks. Tesla's arguably in the EV sector, which I'll get into later. If we look at Nvidia right now, it's been a huge leading indicator. Recently we've seen, Microsoft, even the Nasdaq, follow this kind of big tech rally. What we can see in the long term is that Nvidia can break above this long-term high of about 346.47. Now that probably won't happen tomorrow. It probably won't happen in a straight line. This has been a substantial rally. If we look at other semiconductors, let's start with SOXX first. We do get the idea that there's more room for semiconductors to play catch up to Nvidia. This is a pretty nice template for that. SOXX, a wave 1 and a wave 2, a large wave 3, and an ABC correction, then ended wave 4. A wave 4 that retested the wave 1 high. So wave 5 is either the length of wave 1 or the length of wave 3, place of the wave 4 low. That could take SOXX on a wave 5 beyond a previous all-time high, into the upper 600s, all the way into the 670s. We're pretty far from a useful invalidation right now. The daily chart, the most useful level would be the small wave 2 low down here, which we're kind of seeing other ETFs in the tech sector line up with. Wave 1, wave 2, so above 336 would be the nearest invalidation. Even that isn't that useful. So we're seeing some of these semiconductor names run off. If we look at AMD, we get a similar message. And in-phase energy in Tesla, they're certainly technically, different than the semiconductors. They're different fundamentals, but they are a little related. If we look at AMD, there's this idea it formed a large wave 1 on the all-time charts from the 2015 low, subdivided into 1, 2, 3, 4, 5 waves, then ended in ABC correction at the 61.8% retracement, and if it can begin, or it's already within the process of a large wave 3 to the upside. Another wide invalidation is about 60.05. Again, not very useful. If we look at in-phase energy, I haven't looked at this chart or First Solars since their recent kind of drops. If we look at in-phase energy, it has gone below, or it's at right now, the 78.6% retracement. So if we 339.92, 339.92, I think bar chart fixed 339.92. Perfect. Bar chart did fix their update, where if I move the fibs while the numbers were already displayed, that before it would mess up all the numbers. Now they fixed that, so it doesn't. In-phase energy, it's at the 78.6% retracement. A wide invalidation is 111.42, but that's pretty useful, and it's pretty meaningful that this is a wave 1 and a wave 2, another wave 1 and another wave 2, and we can see in-phase enter wave 3 of wave 3. If we look at First Solar, First Solar has been a pretty big leader in this sector. I haven't looked at this chart since this recent sell-off. The long-term chart, I was looking for a wave 3 to the 161.8% extension. That did get reached, fortunately. Now it's most likely ending a wave 4. So if we do Elliott, so I'm going to do this First Solar chart live. If we're looking at from an purely Elliott wave perspective, and I have not done this since before this take of this video, you're gonna see live. Woo! Okay, so 221.88. That was that wave 3 high, 221.88. And we have 59.60 is the low. I'm going to click the 38.2 and 50% retracement to get this wave 4 kind of zone. Looks like 140 is the 50% retracement, 140.74. So that's going to act as the wave 4 invalidation. A little far from the current level, but I think what's eventually going to happen is that we're going to see First Solar enter. It's within a massive wave 3. This is a wave 1 and a wave 2 from this low, and it's within a large wave 3. This wave 3 is subdivided into 1, 2, 3, 4, 5 waves. This was wave 1 and wave 2. It recently ended wave 3. Now it's going to end wave 4. 159.89 would be pretty tight, but that's that standard place for wave 4 to end. It can certainly end earlier than that. 140.74 is that wider invalidation, and we can see First Solar enter a wave 5 higher into the upper 200s all the way into the 270s, lining up with in-phase energy entering a wave 3 of wave 3, and also Tesla entering a wave 3 of wave 3. So certainly not something I can tell my broker. If we look at Apple right now, we are getting a little bit of bullish evidence from the largest holdings of big tech ETFs in the market. If we look at Apple, this is a wave 1 and a wave 2. It's making its way up to this wave 3 equal legs target of 177. We could see a shallow wave 4 and a wave 5 higher. But even if wave 4 retests the wave 1 high, wave 5 is the length of wave 1 placed at the wave 4 low. And I've actually measured it out so that this wave 4 would begin, around the 38.2 to 50% retracement of wave 3. We can see Apple extend all the way up into the 190s in the long term. We recently got a good amount of evidence from Microsoft that in the short term, Microsoft has done a lot of confirmation, even kind of suggested possibly a more aggressive view, but just most likely in the medium term, even the bigger term picture, is starting to confirm this idea that from the 2018 low, this was a wave 1 and a wave 2, this was a large wave 3, and an ABC correction that's ending wave 4, around the 50% retracement. Now, in the big picture, a very aggressive view could be that this is not a wave 3 and a wave 4. It is, yes, another wave 1 and another wave 2. From this low, we could see Microsoft enter wave 3 of wave 3. Now, that's not really a necessary argument for market bulls to make right now, starting with the fact that we'll talk about SPY right after this, but starting with the fact that even if this isn't a wave 3 of wave 3 being entered, even if it's a wave 5, most likely, in my opinion, the length of wave 3 placed at the wave 4 low would be the wave 5 target. And that could take Microsoft all the way up into, the 420s, 430 is that exact equal legs target. Now, another reason for that is that there's a principle in Elliott wave that says wave 5 is either the length of wave 1 or the length of wave 3 placed at the wave 4 low. So we can kind of visually see that if Microsoft went on a wave 5, there was the length of wave 1 placed at the wave 4 low, then wave 5 wouldn't make a new high above this all-time wave 3 high. So I think it's going to be the length of wave 3 placed at the wave 4 low. Now, the equal legs target in the more aggressive view would be that this is another wave one and another wave two. So the length of wave one placed at the wave two low could take Microsoft's all the way up to 430. So either way, we get the low 420s, even 430 is the equal legs target for Microsoft. If we have Apple going up to the 190s, it's a very similar idea. XLK, Google, Amazon, which I've talked about recently, very similar ideas. Where from the 2018 low, we have a wave one and a wave two, a wave three, and an ABC correction ending wave four. So the length of wave three placed at the wave four low could say that one day pretty soon we have Microsoft, we have Oracle, we have, possibly following Salesforce, Adobe, other members of the software sector towards an all-time high. In the same kind of vein, we could have AMD following Nvidia. We could have, Ethereum following Bitcoin. If we look at Ethereum and Bitcoin right now, we can see that Ethereum has this big 5 waves impulse on the all-time chart. 1, 2, 3, 4, 5 waves up, forming a large wave 1, an ABC correction where the length of wave A placed at the wave B high was exactly where wave C ended. Then we have another wave 1, another wave 2, and then boom, Ethereum breaks above this wave 1 high of 2028. I'm looking for that to be confirmation. Ethereum's within a wave 3 of wave 3 on the all-time chart. And we can eventually see it extend. I don't think it's going to be in a straight line, but it could certainly be impulsive. We could see Ethereum enter a wave 3 of wave 3 on the all-time chart, very similar to what can happen to Bitcoin. So I am using, I go into a lot of risk management. A lot of it includes covered call ETFs. A lot of it includes a lot of diversification into commodities, physically backed assets, like the precious metals. Like this idea that silver and gold. First off, Bitcoin. Very similar idea to Ethereum. The more recent invalidation is on the smaller degree. 19,593, right? That would be a closer daily chart invalidation. It's not even that meaningful. It's not even that useful. So I'm, as Bitcoin gets higher and higher, I'm slowly taking profits on BITO, but I'm not taking off everything. I'm still making sure I have even more than my original position size. I bought BITO, when Bitcoin was pretty low. I scaled into Litecoin more recently than that. I have a long trade history with a lot of these, stocks and ETFs, but, even closer, right? Bitcoin being above 19,000, 353 isn't that useful, right? Even above 20,000 isn't that tight. Ethereum, right, might be a more useful level, but even that, 1372, that's pretty nice from 1890, but I think that there are more useful ways that I'm going to be managing risk. A lot of them come from buy right ETFs on the indices, buy right ETFs on growth indices, like OARK and Tesla, position size on these higher beta vehicles, like Bitcoin. If we look and switch to kind of some lower beta vehicles, we've seen a little bit of, love for this consumer disco sector. I recently bought Starbucks when it was in kind of the low 80s, high 70s. And my position was up 30%. So I sold about 25% of my position, about 20% of my position to lock in a little bit of the gains. They have earnings coming up, but we're seeing, more and more of these consumer discretionary XLY holdings get closer and closer to these wave one highs from 2021. If we look at, other aspects, I thought this was pretty important recently. We had Polta Group. This is a big home builder, and I don't have these charts as marked up as I would like to. And I know the sector is kind of boring, right? But we've seen some of these home builders like Polta Group. Polta Group just recently, this is a 4 or 5% holding of XHB. It's recently broke above an all-time high. Also this wave one high. So the charts of Liner Group, ticker LEN, the charts of DRI look very similar to this, where they're about to break this wave one high too. Polta Group could be going on an equal legs target all the way to plus 80. DRI, LEN, very similar story where they're getting close to breaking this wave one high too. I think XHB, Home Depot, Lowe's. I recently invested in copper. There's more and more signs that we're gonna see kind of this hard asset. The home builders, and I think the metals particularly. But we're seeing platinum, start to firm up. We're seeing copper start to firm up and start climbing the right side of this base. So I invested in copper, CPER, in COPX recently, but I think very similar to the home builders, a wave one, a wave two, and a wave three. The length of wave one placed at the wave two low could take copper from CPER from 23 to about 36. If we look at XHB, I haven't marked this chart up yet for this video, but just to give the target, it's the same idea where this could be a large wave one, subdivided into 1, 2, 3, 4, 5 waves for XHB. So this could be wave one. This could be a wave two that ended in 2020. And we could see XHB enter a wave three. So if wave three were the length of wave one placed at the wave two low, then in the same way that Polta Group, Liner, and DRI are getting close to breaking this wave one high, I suspect we could see an instance where the home building ETFs like XHB, even like the leverage ETF Nail, could go break this wave one high, enter wave three of wave three, and that equal X target would be 114.51. We're a little far away from a wide invalidation of 52.99. But in the big picture, I think we're starting to see, the metals like silver, like copper, like gold, get close to breaking these late 2020, mid 2021 highs. And we're going to start to see, in my opinion, hard assets rally. If silver, very tight. If SLV was above 18.38, the wider, more meaningful invalidation would be 16.19. We could still see silver enter wave three of wave three, up into the low 30s, even the high 30s in the big picture. So yes, I think that the S&P 500 SPY could, have a nice rally staged. I'm going to get more and more into my risk management for if it doesn't, which I think I've covered a lot. I think SPY right now still giving the best downside levels for the market. If I had to wrap it up, SPY above 374.77. Bulls are going to say this is wave one and wave two. This is a small wave one and another wave two. We can see SPY enter wave three of wave three in the big picture, in the long term, all the way up towards the 600s. Seeing big tech holdings like Google and Amazon that are all the way down here start to follow, in Tesla, start to follow stocks like Facebook, Nvidia, Bitcoin and Ethereum could also be following. That's kind of what the bulls, from an Elliott wave perspective, are going to be arguing above 374.77, that this is a wave three of wave three. beginning. So that's technical analysis. That's not risk management. That's not. It's certainly not finance to me. But I think SPY above 374. We're gonna start to see more and more people respect the upside risk in this market.